Well, welcome to this report, the 12th of February 2025. Right, today I'm talking about the impact of trade wars on the US dollar and other currencies market and look into a detailed analysis on them. Okay, so in 2025, the global trade landscape has been significantly shaped by the return of Donald Trump to the US presidency and his aggressive tariff policies. Now, building on his America First agenda, Trump has expanded tariffs not only on China, but also on other major trading partners, including the European Union, Mexico, Canada, and select Asian economies. Now, trade wars have historically had significant implications for foreign exchange markets, particularly the US dollar and currencies of major trading partners. Now, the 2018-2019 US-China trade war provides a useful framework for understanding these dynamics, while recent developments up to February 2025 offer additional insights into how trade tensions might shape FX markets in the future, right? So let's first dwell into the insights from the 2018-2019 trade war. So what happened during that period of time? Now, first of all, the US dollar strength amidst certain uncertainty. So during the 2018-2019 trade war, the US dollar strengthened significantly due to its role as a safe haven currency. The dollar index, which measures the US dollars against a basket of major currencies, rose by up to 10% in 2018 and 4% in 2019 during periods of heightened trade tensions. This was driven by trade policy uncertainty, where investors flocked to USD as a stable asset amidst fear of a global economic slowdown. And we had capital inflows. The US economy appeared relatively resilient compared to its trading partners, attracting foreign capital. And number three, Federal Reserve policy, the Fed's interest rates hikes in 2018 further supported the US dollars, right? So they had the high, high interest rates that are rising. Number two, what are the insights is the Chinese renminbi depreciation. The Chinese yuan depreciated by up to 10% in 2018 and 5% in 2019 as trade tensions escalated. The People's Bank of China allowed the currency to weaken to offset the impact of US tariffs, making Chinese exports more competitive. However, this led to the US labeling China a currency manipulator in 2019, adding to FX market volatility. Other than that, we have the impact on other currencies. The euro depreciated by up to 10% in 2018 and 4% in 2019, as the Eurozone economy faced headwinds from reduced global trade. Now, as for the emerging markets currencies, commodity-linked currencies like Mexican pesos, Chilean peso, the South African rand were particularly vulnerable, with the Mexican peso dropping by as much as 14% in 2018. Okay, so this is what happened during the 2018-2019 trade war. Now, in general, right, we now look into factors influencing the currencies in a trade war. First of all, it's just not just trade war. We need to look into other factors, and the very first thing would be the interest rate differentials. Now, as I've already brought it up on during Monday's report, you can, if you're not sure about that, what does it mean and what does it entail? I suggest that you go and watch the video again or go and read the report. So the interest rate policies remains a critical driver for currency movements. The US dollar strength is partly due to higher US interest rates compared to other major economies. So if the Fed cut rates in response to a global slowdown, the US dollars could weaken. Okay. Now, the other thing also you need to understand is the global risk sentiment. Trade wars increase global economic uncertainty, which typically benefits safe haven currencies like the US dollars and the Japanese yen, while weighing risks on riskier emerging market currencies. Number three, commodity prices So commodity-linked currencies like the Aussie dollar, the Canadian dollars, the South African rand are sensitive to changes in global trade dynamics. A trade war that disrupts global supply chains could depress commodity prices, hurting these currencies. And number four, central banks intervention, particularly in the emerging markets, may intervene to stabilize their currencies. For example, the People's Bank of China has used its foreign exchange reserve to prevent excessive Chinese yuan depreciation. So these are the factors that could happen. Okay, so given the recent tariffs escalation under Trump's 2025 administration, the foreign exchange market faces various possible outcomes. Below is an expanded analysis on how major currencies may react under different trade war scenarios. So I'm going to give you two scenarios. Scenario one is the escalation of the trade war. So if the trade war intensifies, global markets could experience volatility, driving investors towards safe haven assets and impacting trade-dependent currencies. So first of all, the US dollar would probably strengthen because as mentioned before, it is viewed as a safe haven asset and is likely to appreciate. The US Federal Reserve may delay or adjust cuts due to inflationary pressures from tariffs, keeping interest rates high and attracting the more people who wish to keep in US dollars as safe haven while enjoying a higher interest rate. Okay. Next, also we have increased capital inflows into US Treasury bonds, and that also could support the dollar because the US bonds is considered a safe asset during turbulent times. And the dollar index could surpass its current high, testing 110 level. Okay, so this is what we see. As for the Chinese renminbi or the Chinese yuan, it would probably depreciate following the 2018-2019 movement. The PBOC could allow a controlled devaluation of the yuan to counteract tariff-related export losses. Move past to 740 per the US dollars is possible if China faces intensified trade restrictions. Now, capital flight risk could accelerate if domestic economic confidence declines. Okay, so next is the euro. It will probably weaken. Trade tensions could weigh on German exports and broader EU growth. Now, the European Central Bank may respond with more dovish policies, exacerbating euro weakness, and a drop towards parity is plausible and even below parity, especially if the war is ongoing and it's not showing any signs of abating. Okay, the Ukrainian war, right? So that's euro. As for the Japanese yen, it could be mixed. Typically, the Japanese yen strengthened as a safe haven currency in times of economic uncertainty. However, Japanese exports are vulnerable, especially in auto and semiconductor industries, which rely on stable global trade. Now, potential move below 148 per US dollars could occur despite short-term appreciation pressure. All right, that is the view on the yen. As for the pound, it's likely to depreciate following the path of the euro as well. As the UK economy struggle with weak growth, any further disruptions in global trade could harm manufacturing and financial services sectors. Brexit-related uncertainties further weigh on pound, potentially pushing it towards 120 per US dollars. Okay. Now, the Australian dollar would be under pressure given its strong ties with China. A prolonged trade war would hurt the Australian dollar. Now, risk-sensitive investors may pull capital, pushing Aussie dollar below 0.62 per US dollar. Yeah. For Canadian dollar, modest weakness. As major oil exporting nation, Canada's currency is vulnerable to global economic slowdown. US tariffs on Canadian steel and aluminum could put downward pressure, sending CAD towards 138 to 140 per US dollars. But if they were to apply the 25% blanket tariffs on Canada, I think the Canadian dollars could even drop much lower. Okay, so but we shall see, given that first of all, I think they just need to settle first the border issues. And I want to know, would Trump still impose that 25% or actually reduce it? Okay. So that is the view for the situation whereby escalation of trade war, right? What about a de-escalation or a resolution of trade war? Okay, de-escalation, that means not that high, or resolution, they have an agreement, they may not do this. Same thing like Trump, he has announced that Australia may be exempted from these tariffs. You know, these kind of things can happen, but everything is not confirmed yet, you know, because there's just the tariffs is really, really important agenda for Trump's ascension. So I believe that he will still go look into it, and there are many ways. Okay, he's a business guy. At the end of the day, he knows how which button to push. So if tensions is through trade negotiations or tariff rollbacks, okay, global risk appetite could improve. Now, when that happens, it would see the US dollars weaken instead, because a shift towards risky assets could lead to a US dollar decline. So if the Fed resumes rate cut, the dollar could move to 100 or on the dollar index. Okay. Now, for the Chinese yuan, it could stabilize or appreciate, okay, depending on the situation. So if tariffs are lifted, China may allow a mild appreciation of the yuan. The Chinese yuan could strengthen towards $7 per USD if investors in sentiment improves. As for the euro, sorry, I didn't put that, so that's what I meant. Now, as for the euro, it's expected to recover. Stronger trade flows and improve European Union business sentiment could support the euro rebound towards the 108 per USD. Okay. And the ECB might hold back on further stimulus, providing additional euro support. Now, as for the Japanese yen, probably would strengthen modestly. A risk on environment would typically weaken safe haven currencies like the Japanese yen, but this time the impact is different due to the BOJ policy shift. Now, the BOJ is no longer ultra loose with a 1% rate hike plan. Japanese yen has fundamental support to strengthen if external risk subsides. So the Japanese yen could appreciate towards 140, 145 per US dollars, depending on how aggressive the Bank of Japan signals further tightening. As for the pound, it's probably will strengthen slightly. As risk sentiment improves, pound could rebound toward 126 per US dollars. However, lingering UK economic challenges could limit gains. Now, for the Australian dollar, I expect it to rise. A China-led recovery could push Aussie dollar towards 0.7 per USD. And finally, the Canadian dollars strengthened slightly. Oil price stability could lift Canadian dollars to 140 per US dollars. Okay, so that's how the view on the tariffs, the possible views. And yeah, I will this based on the developments that we've seen so far. But like anything else in the economy, nothing is fixed and set on stone. So if there are changes, as usual, I would be highlighting it in the reports, and you may see a higher frequency of this report coming up, given this, Trump is not someone who he likes to surprise the market. So with the surprises, I would let you all know. Okay, so that's a report for today. Thank you.